Warren Buffett is one of the greatest investors of all time. He has amassed a multi-billion-dollar fortune investing through his company, Berkshire Hathaway. When you're aiming to reach the top of a mountain, it's usually wise to closely follow the footprints of those who've successfully made the climb before you. Your odds of investing success can increase exponentially if you learn and apply Buffett's best investing tips. Today, I'm going to show you the greatest rules of investing advice according to Warren Buffett that could help make you become financially successful. Here's the surprising thing. Buffett's wisdom seems so common sense and practical, and yet it can lead to great wealth. Don't miss any of these tips. Watch until the end and subscribe. Here are the 10 greatest rules of investing success by Warren Buffett. 1. Rule number 1 is never lose money. Rule number 2 is never forget rule number 1. As an investor, you're trying to profit in the stock market, but one of the best ways to do that is by avoiding losses. When you eliminate decisions that expose your portfolio to losses, what's left is more than likely to be a gain. When you have more money in your portfolio, you can compound your gains even faster. This approach has implications for how you invest. Buffett's quote suggests that instead of looking for the highest upside, you should be looking to avoid loss first and only then look at gains. 2. Get high value at a low price. In 2008, Buffett shared another key principle. Price is what you pay, value is what you get. Losing money can happen when you pay a price that doesn't match the value you get, such as when you pay high interest on credit card debt or spend on items you'll rarely use. Instead, live modestly like Buffett does by looking for opportunities to get more value at a lower price. Whether we're talking about socks or stocks, I like buying quality merchandise when it is marked down, Buffett said. 3. Be fearful when others are greedy, and be greedy only when others are fearful. While some investors think investing is a lot about the numbers, Buffett suggests that investing has much to do with the behavior of investors themselves. When investors are greedy and push the prices of stocks to the sky, Buffett becomes fearful because a market plunge may soon follow. In early 2020, the market plunged as worries about COVID rattled investors. However, some investors dove into the market amid the fear, and the market rallied furiously off its lows. 4. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. While some value investors focus on buying only the cheapest companies, Buffett suggests a better course of action is to buy wonderful companies, those with better economics and competitive positions. Part of the difficulty here is that whereas fair companies may go on sale relatively frequently, the great companies rarely look cheap. Along these same lines, Buffett has been a long-time buyer of Bank of America, a bank with branches across the country and an enviable deposit franchise. As of the first quarter of 2023, it occupied the second largest position in Berkshire Hathaway's portfolio, and the stake is worth more than $29 billion. 5. If you like spending 6 to 8 hours per week working on investments, do it. If you don't, then dollar cost average into index funds. Buffett has long advised most investors to use index funds to invest in the market, rather than trying to pick individual stocks. By picking individual stocks, you're working against the pros who have extensive intelligence on companies. By all means, if you enjoy investing, then do it. But most investors are going to be well served by using an index fund, and especially by avoiding trading in and out of stocks. Another advantage of using index funds: immediate diversification, which lessens your risk. 6. Keep cash on hand. Another key to ensuring security is to always keep cash reserves on hand. Warren Buffett's company always maintains at least $20 billion, and usually far more in cash equivalents, he often said. Businesses and individuals alike might get an itch to put liquid cash to work through investments. Cash, though, is to a business as oxygen is to an individual. It is never thought about when it's present, but is the only thing in mind when it's absent, Buffett said. 7. You don't get paid for activity, you only get paid for being right. There's no shortage of stock market analysts and commentators who are willing to tell you what you should be doing with your money at any given time. Warren Buffett reminds investors that being an active trader who constantly switches from position to position isn't likely to produce great returns. Activity can feel productive in the world of investing, but the only thing that matters is whether you were right in your analysis. 8. Invest in yourself. Buffett once said, "Invest in as much as yourself as you can. You are your own biggest asset by far." He echoed those sentiments in an interview once when he said, "Anything you do to improve your own talents and make yourself more valuable will get paid off in terms of appropriate, real purchasing power. And, unlike other assets and investments, nobody can tax it away. They can't steal it from you." 9. View money as a long-term game. Buffett once said, "Someone's sitting in the shade today because someone planted a tree a long time ago." And it's true, planting and nurturing the seeds of financial success now will lead to enjoyment later in life. That shade might include freedom from debts, a secure retirement, or the ability to cover the cost of college for your children. Warren Buffett urges investors not to focus on moments of stock market volatility or economic crises. 10. Get started early. First and foremost, Buffett recommends getting started early when it comes to investing to take advantage of the power of compound interest. He describes the power of compound interest as building a little snowball and rolling it down a very long hill. As the snowball rolls down the hill, it collects more and more snow until it becomes a huge snowball. When someone asked him how they could make billions of dollars, Buffett said, "The trick is to have a very long hill, which means either starting very young or living to be very old." Building true wealth and financial security takes time, and you'll likely encounter financial challenges along the way. But viewing finances as a lifelong endeavor can help you stay on course despite the hardships. This will give you a financial foundation that will last. While Warren Buffett may be one of the most successful investors ever, his investment approach can be shared by many investors, even if they don't want to spend a lot of time in the market. Focus on implementing Buffett's principles, and you too could become wealthy or increase your net worth substantially. Thank you for watching. Please consider sharing this video, like, and subscribe.